Hi, I'm Toby.
And I'm Nick.
And we're here bringing you the Pure Property Podcast with Track Capital, where we talk about everything property and property investment. The aim of the podcast is to give you bite-sized chunks of our industry insight and knowledge to help investors invest intelligently. So we've had some more good news related to COVID-19 this week. We've had the news of another vaccine has been discovered. Isn't that right, Nick?
Yeah, so obviously the Moderna one that was announced most recently, apparently 95% sort of effective or almost at that level. I think it was 94.5 or something like that. But yeah, really positive. I think the UK have ordered a batch of that. But then obviously the big one for us is the one coming out of Oxford. I think it's in partnership with AstraZeneca or something along those lines. And then the UK is in line for, I think, 100 million doses of that. So eagerly awaiting the news on that one. And yeah, as I'm sure you're aware, Toby, the reason why we are so sort of interested in it is because it does affect the property market relatively quickly, just in terms of the inquiry levels that we've seen. So we did see a spike from last week or the middle of last week, and an uptick in inquiries on our various marketing channels. So yes, a few developments and impacting the business positively.
Yeah, true. It's definitely helped to bring some confidence back in the market, which is always good. So this week we are going to be discussing the benefits of investing off plan.
Yep. So obviously we're going to run through the main sort of reasons that we pick up on. So top 5 reasons to invest in off plan. And just before that, I think it's worth just going over a couple of questions and points of consideration for investors, just so you're aware of what sort of things you should be considering and how to decide if off-plan investment is for you. So, Toby, if you want to kick us off and maybe give us the first point that investors may want to consider.
So the first question you definitely have to ask yourself when considering off-plan investments is, are you looking for immediate income? Because when you're purchasing off-plan, you are purchasing while the development is still being built, so you won't be able to rent it out straight away and have immediate income. So that's definitely the first question you have to ask.
Yeah, so it's all to do with strategy, isn't it? So if you're looking for that stable, immediate income, then obviously buying a project that's a year out or so from completion may not be the best bet. Another fact to consider is your risk profile. So in years gone by, there's been a few sort of horror stories, but most recently we've found that developers are, if you're choosing the right one, really reliable on delivering projects to a high standard and on time. But it doesn't take the fact away that ultimately you're still purchasing a property during the construction period. And some investors, no matter how much you sort of educate them and advise them, they see it's just simply not the right strategy for them. So give consideration to how risk averse you are, and we'll discuss a bit more on this later. So, and what's the last question you have there, Toby?
Yes, the last question you would have to consider when seeing if off-plan property investment is suitable for yourself is, how easily can you get a mortgage? So unless you are a cash buyer, this won't be an issue. However, if you are looking to leverage the purchase via a mortgage, then you do have to consider that you won't be putting a mortgage application in straight away. So just bear in mind that you will have to factor in what will be your circumstances later on down the line, because the standard practice is to start applying for the mortgage around 6 months before completion of the project. So if you're purchasing something which is 2 years off being completed, then just bear in mind that during those 2 years, you will have to factor in if something may happen that may change your circumstances. How easily are you going to get a mortgage?
Yeah, I think it's definitely a point worth considering, especially for those investors that are more at the early stages of their sort of investment and sort of journey and building their portfolio.
Of course. And I think another thing to think about when it comes to the mortgages, if your circumstances do change, there are a lot of mortgage products out there. I mean, I would definitely recommend having a conversation with a mortgage broker so he can let you know the different scenarios and the different potential options that are available for you right now to give you a slight indication of what you'd be looking at when you come closer to completion.
Okay, perfect. So those are a couple of, or 2-3 questions there that you want to think about and may run through your mind prior to sort of reviewing off-plan property investments. So what we'll do now is we'll move on to the top 5 reasons why off-plan purchasing may be beneficial for you and could be a really profitable strategy in the long term. So kicking things off then, I'd say the number one reason for me is the opportunity to pick the most desirable units in the development. So when we're buying apartments, obviously, in some cases there's hundreds of units being built in an individual development, but then also there's a lot of construction happening in these cities like Birmingham, London, Manchester, Liverpool. So other developments are flying up as well. Now, to give ourselves the best opportunity of capital growth, resale ability, tenant demand, etc., we really want to make sure we have a unique proposition. And by buying in a development early on and picking out those units with a unique selling point, so a USP, is really going to give us the best opportunity for long-term growth. So that could be, a high floor location. It could be a corner unit. It could be how close they are to the courtyard or the communal facilities. Could be unusually large living space or a balcony, or even the most common one, having a stunning view. So yeah, that's certainly a big point for me. Being able to pick out the most attractive units within the development is my number one reason why we would consider investing in off-plan property.
Yes, and another reason why you can consider investing off-plan, it would be the discounted prices and incentives that you have access to. So when investing off plan, the developers are incentivizing purchases because obviously they know there's a risk factor with the construction phase and they need to incentivize buyers to purchase. So the way they do that is usually firstly by discounted prices. So what you will see along the development process is that earlier on in construction you purchase, the bigger the discount. The further along the construction process goes on, the less risk, of course, there is to an investor or a purchaser, so the price will then increase. So the earlier you get in, the bigger the discount. And as they say in property, it's the price you buy at, not that you sell at, where you really make your money. The other added bonus would be the incentives on offer when purchasing off-plan. So another way developers incentivize purchasers is by having incentives such as free furniture packs, assured rental periods, interest on deposits. There's a number that they can add on into the mix, not only just the discounted pricing factor. So that's definitely another top point on why off-plan investing can be very lucrative.
Definitely, and I think it's just worth mentioning there as well, speaking about pricing, discounts, and then also about incentives that are available. What a lot of developers do is they do package up the investment so it's as attractive as possible to the investor. And that's exactly through what you mentioned, Toby. So assured rental periods on completion, interest, free furniture packs, etc. So what I would just say, and a bit of advice to investors, is don't always look and take the bottom line price as the number one deciding factor. If you have to pay £5,000, £10,000 more, but you're getting £15,000 to £20,000 worth of genuine incentives that will ultimately impact your return on investment, then obviously the latter of those choices would be more attractive. So do bear that in mind as well. Now, slightly related to that point then, moving on to the next number 3 factor in off-plan investment and the benefits. So capital growth. So when you're making an investment, you'll be expected to put down a deposit of anything from 10 up to 35% as a deposit level. There are options out there at higher deposit levels, but at Track Capital, we would only recommend a 35% deposit at most. Now, what you can do as an investor is put down this deposit, sometimes have it protected and nice and secure, but you can still benefit from the growth and the market value increases during the construction period on the entire property value purchase price. So if you're putting down, £30,000 and the property value is £300,000, you're going to benefit at the growth rate on the £300,000 rather than just the £30,000. So there's a good opportunity to benefit from capital growth during the construction period. And obviously that brings a couple of advantages along with it. Firstly, you have the opportunity to sell at any time you want. So if you decide you want to exit quickly, if your circumstances change and you need to sell, then you have the option to do so. But also in line with that, you can flip the property. So if you're looking at an 18 to 24 month build time frame, genuinely, if you're getting the right development, there's going to be a good level of growth during that time period. So there is going to be, on some occasions, opportunities to flip, exit, and make a quick profit.
Yeah, correct. And we do have some people that look at that as a strategy. For me, it's not a strategy that I really recommend doing solely, just because you have to have the options available, and you should always bear in mind that if anything changes and you can't flip the property, that you are able to financially hold on to the property and rent it out. That said, there are investors out there that do very well from flipping these properties. Like you mentioned, the capital growth that they experience during the build is so good that they're able to capitalize on that. Plus, what you have to remember is when you are flipping the property, because you're technically not completing on it and you're selling it back on, you then don't have to pay the costs such as stamp duty, which again helps with your profit margins.
Yeah, I mean, it can be quite an advanced strategy and good for people that already have the income from assets that they already own and that are complete. But yeah, it's definitely one for some people to consider. So moving on then, Tobi, do you want to give us the next one?
Yeah, another reason why purchasing off plan can be very beneficial is that you're buying a shiny, brand new apartment or property, which when it comes to demand is very appealing. So obviously as a renter and looking at your potential tenants, they are going to love the fact that they are getting a shiny new property to live in and rent from yourself, which then helps with one, demand, but also the premium that you can potentially charge the tenants as well. So this is another good factor that you have when considering this. As you know, if you do buy in the secondary market, what you'd have to bear in mind is you may have to do some touching up here and there. You might have to spend money on cosmetically to get it up to a good standard. And if you don't, obviously just bear in mind that there might not be as high a demand or the ability to charge such a premium that you can for a new show home looking property.
Yeah, just going back to the tenant demand aspect as well. Also, it can ultimately, if you've got a new build development that's performing better than maybe the slightly older development next door, one, you can minimize void periods. Two, you can maximize your rental potential. The other thing as well is that there's far less management involved and less maintenance issues, as you mentioned, Tobi. So hopefully it will lead to an overall more stress-free experience and investment journey for our buyers.
Of course, because when you purchase the new build property, just remember that you will be able to and have the opportunity to do what they call a snagging list. So when the property's built, you get a period of time where you can go back to the developer and say, look, can you touch this up or put a bit of paint here? Again, when it comes to sort of the maintenance side, it means you've got very low outgoings from the offset because you've got the ability to capitalize on that. And also just remember that you will have an industry standard 10-year new build warranty. Now, there are different providers. The most common provider and the most well-known is the NHBC, which gives you 10 years of warranty on that property. So again, any major issues, you're able to go back to the developer and get those sorted. So when you're considering a hands-off investment and low maintenance going forward, that's another benefit of purchasing off-plan.
Definitely. I mean, at the end of the day, we're all busy people. We've all got families and things to do. So having a stress-free experience always helps. Okay, so moving on to the last point that we're going to discuss today, and a point that's almost a reflection of the market itself and the UK property investments that are available. So when you look across cities like Manchester, Liverpool, Birmingham, London, even Leeds, and there now comes a point where a lot of the most attractive developments in these cities that I've mentioned, they completely sell out during the construction period. So by the time you get to completion or very close to completion, what you'll tend to find is the far less desirable units are available. It goes back to the first point I mentioned, but you're going to be looking at things, near the lifts, near the stairs, on the ground floor, the slightly smaller units. So there is some element of it being almost a necessity in some cases. If you do want the most attractive developments and the most attractive units in that city, wherever it may be, in some cases you do have to simply buy off plan. So hopefully those 5 points and a couple of the questions at the beginning give our listeners a good sort of overview. Is there anything else that you'd sort of like to add at all, Tobi, or what's happening next?
Yeah, I think the one thing we would have to stress when talking to our investors is buying off plan doesn't suit everybody. As we've mentioned previously in this episode, ask yourself the 3 questions. Look at your personal circumstances and what you're looking to achieve investment-wise. As we know, and as has been proven, investing off plan can be very lucrative, and as we've discussed in this episode, has its advantages. But it will not suit every investor, so make sure you're asking yourself those questions and make sure that this suits what you're looking to do and your strategy.
Definitely. I think that's the key point. You need to work out what's best suited to your personal plans. One of the things we do when we speak to investors is really try to understand their long-term objectives, what they're looking to achieve, what they're happy with. And you've just got to be realistic with yourself and, weigh up your options and then make a decision to move forward from there. But ultimately, pension funds, insurance funds, investment groups, they're all buying, often off-plan apartments in prime city centre locations. So I think it does really represent a strong opportunity, especially when you add on things like the build warranty, investment packages, the security available, etc. So hopefully that's helped today, guys. And Tobi, do you want to let us know what we'll be looking at next week?
Yeah, it's actually quite a good topic to follow on from what we've discussed this week. Next time, we're going to be discussing yield versus capital growth. And again, it's something that we talk about on a daily basis with investors. And it's actually one of the first questions we always ask when trying to narrow down what an investor's trying to achieve. So it's going to be a good topic to cover next week, and I'm looking forward to it.
Yeah, and just without going into too much detail, when we say yield and growth, just for those that may not be aware, we're referring to effectively rental income potential versus property value rising potential. So we'll discuss, what to look for, what we think are some attractive propositions out there, and really give you guys a chance to work out what your number one strategy may be.
Of course. And obviously the topics we've gone over this week, we have gone through them very briefly. But if you do want to discuss anything further, please feel free to reach out to us. We're on all the social media platforms, and feel free to send us an email at info@trackcapital.co.uk, or you can go onto our website where we do have some investment guides which help to give you some information and some advice on this type of investing.
Yeah, and the website is trackcapital.co.uk.
And one more thing before we go. If you have listened to this and you've enjoyed it, please leave us a 5-star review on Apple Podcasts, as this does help get us up in the rankings in the charts and gets us in front of more budding investors that would benefit from our advice.
Okay, guys. Well, thanks for your time today, and we'll catch up with you soon.
Take care. Bye-bye.